So in this video, I wanted to go over my profits for the week selling options with Questrade. So for the week ending December 18, had a total net profit of $643.60 US. So let me go over my trade. So I've got a bunch of put spreads, as you can see here, and then a few naked puts, one covered call, and another put spread. Now this covered call was actually me just simulating a naked put, but in a TFSA. So it's actually the video that I uploaded yesterday. It talks about doing covered calls in a TFSA that usually replicates a naked put or a cash secured put, to be more exact. I've also added some columns to my spreadsheet. I've added the close date and I've added days held, so how long the trade was open. So you can see here December 14, I closed all these entries here. So I closed VMware again, Amazon, Tesla, and Splunk. So VMware was an earnings trade, a put spread that didn't go well, and I wasn't able to close it as soon as the earnings was released. I had to hold on to it to December 18, but I saw an opportunity to close it December 14, so I went ahead and closed it. And I closed it at the same time as this one here. And this 130-125 put spread on VMware, I opened it when VMware dropped after earnings. So I saw another opportunity to get in after the drop. So this was before earnings, this was after earnings. Collected $1 the first time, collected $1.05 the second time. One of them had December 18 expiry, the other one had January 15 expiry, and I ended up closing them for about 50%. So it gave me a profit of $42 and $42 on the other one. So together about $84 net. And then Nvidia, this was a trade on Nvidia, a put spread. I had a put spread at 535 at some point that got breached on expiry date. So I decided to roll it from, I think it was back in November. I rolled it all the way to December 18. I increased the width of the spread, so it was a 5-point spread. I brought it down to a 10. I brought it up to a 10-point spread, so I can bring my strikes lower from 535 to 480, and I had to pay a debit for that. So you see, initially I had collected $1, and then after that I paid $1 to roll the trade down. So now I'm at 0. So by letting it expire worthless, I basically scratched a trade. Instead of losing $300, I basically avoided that loss. I ended up closing it on Monday for 13 cents. When I saw it trading at 13 cents, I'm like, okay, let's not take any chances. Let's just close it for 13 cents. So with commissions, it ended up being about $26. So it was a small loss, but it avoided a much bigger loss. And then this Amazon put spread, as you could see on this column here, I only held it for 5 days, and Tesla as well. I think I opened them at the same time. Yeah, I opened them December 9th when the market was dropping. So Amazon put spread 3,005, and then Tesla 525.15. I closed them for 27 cents and 25 cents on Monday. Obviously could have closed them for nothing if I had waited till Friday. I think they expired, they expired December 18, so they could have expired. So they could have expired worthless as well. Regardless, together made $122 net profit on those put spreads held for 5 days. And then Splunk, I went into Splunk after earnings, after it dropped from I think 210 to 160. I got in at 140, 135, collected $1.05. January 15 expiry, and then on Monday, December 14, I closed it for 52 cents. So that gave me a net profit of $40 after commissions. Fubo, I entered it at a 20 strike, collected $1.50, and I definitely got out of it too early. This is not the first time, and it's not the last time. I closed it for $1.43. I think the next day Fubo jumped 10%, and then so when I got into Fubo TV, the stock was trading at 27. I went with a 20 strike. I think today the stock is trading at $38. So from 27 to 38, I definitely could have closed this for a much better price than the 143 that I paid. So this is basically a useless trade. I lost $4 on that because of commissions, but would have made easily maybe $70, $80 if I just held it a few days more. So this Zoom put spread, I opened December 9th. It had a January 15 expiry. I collected $2.01. It's 10-point wide. I collected $2.01, and I closed it December 16 for $1.25. Just didn't feel like holding on to it to January 15th to collect more profit. I tend to close trades early. I noticed this is a flaw of mine. I'm a little bit impatient. If I see a little bit of profit, I tend to take it too early and then regret it a few minutes later. So regardless, this one was $63 net profit after commissions. Oh, this is actually a good one. I'm proud of myself on that one. I'll explain why. So this was a put spread that I opened December 11 on Snowflake at a 310 strike. Collected $1, expires this Friday, December 18th. I believe on Monday, was it Monday or Tuesday? Snowflake dropped all the way down to 303 really fast. I think it was on Tuesday. Now, I didn't even notice that. I was busy working, so I didn't have time to panic. I didn't get to react because I was busy. But if I saw it, most likely I would have reacted. I would have tried to roll it, and I would have sold another put spread lower on Snowflake. So that was a missed opportunity that I didn't sell another put spread lower. So regardless, Snowflake went back up again the same day, almost to 320, and then the next day 330, and then it started hovering between 320 and 330. And most of the day, I think on Tuesday, it was trading at around 318. So I held on to it, but I closed it December 16 for 45 cents. This would have expired worthless if I held on to it till December 18. But didn't want to take any chances because I know it can move hard. So that was a $42 net profit after commissions. Lemonade, I opened December 11, at the same time as Snowflake. So it was last Friday with a January 15 expiry. I did 65.60 put spread, so very far. The stock was trading in the 90s. Collected $1. I closed it for 45 cents on Thursday, December 17. So that's a 6-day hold. Snowflake was a 5-day hold. Made a $42 net profit on Lemonade as well. So Visa, I had opened November 30th. So this is a 17-day hold, as you can see here. January 15th. So it took forever to decay and to be able to close it. And even after closing it, because of commissions, I think it was only $32 net profit. So not really a big deal for 17 days, especially. And then another put spread here. This is 18 days, Beyond Meat. I opened it after it dropped hard after earnings, then came back up and then stayed steady a bit. So I sold a put spread at that point. I sold at the 120, 115 strike. So it was 20 points away when I sold it. Collected $1.08. January 15 expiry. I was able to close it today, December 18 for 50 cents. And that's a $45 net profit after commissions. And then I've got this put spread and this put spread here. They're both SPACs that I opened December 17. So on Thursday, naked puts. I did 2 contracts. I collected $1.15. I collected 85 cents. And then I realized that if they merge with the stock that they're representing or that they're merging with, I wasn't sure what would happen to the options if the new stock doesn't have options. So if they were in the money and then they merged, but then the new ticker doesn't have options, wasn't sure what would happen. So because of that uncertainty, I decided to just close it the next day right away. So I closed this one for $1.10 and I closed this one for 65 cents. So very small profit. So I actually made, because it was 2 contracts, I made about $24 net profit on both of them combined. But if I had just held on to them, they actually went even higher the rest of the day. Could have probably made more profit than that. But regardless, I just wanted to get out because I wasn't sure what would happen after the merger. So I'll get to this covered call after. I'll move on to, I'll go to Unity put spread first. So this is a put spread on Unity. I did 2 contracts at a 115, 110 strike. Collected $1.08. January 15 expiry, and today I closed it for 59 cents. So because it was 2 contracts, commission compared to profit wasn't so bad. Collected a net $81 profit, so not bad. And then Dash, I was going to do a naked put on Dash because it dropped hard today. It dropped a lot. I think it reached an all-time low today of 137. I wanted to do a naked put at 120 in my margin account. Then decided, let's try doing an in-the-money covered call instead in my TFSA. So what I did was I bought the 120 covered call for 115.6. So that's why I've got a negative here, because I paid to get into this trade, 115.6. And then a few hours later, I was able to get out of the trade for 116.69. So I paid 115.6 to get in, and I sold the covered call for 116.69 to close the trade. And if you notice Dash today, it went from 137 to 168. So that's just a ridiculous move. That was really lucky. It had a January 15 expiry. So for me to make full profit, what's my full profit? My full profit is basically the difference between the strike and what I paid to get in. So my max profit on this would have been $4.40. So when I saw that I could collect $1 today instead of waiting to January 15. So that's why it's a 0-day hold. Close it the same day. Gives me a net profit of $97. So I couldn't ignore that. I took it. Could have made more actually if I just waited a few minutes more, which is the story of my life here. But regardless, can't complain. I mean, the whole week overall is an extra 643 US. Can't complain. I miss when the US dollar was 1.45 back in March. But I don't miss March though. Now US is 127, so this is worth much less right now. And now I'm left with these trades. So I've got an RH put spread 415, 410 for January 8th. CRM put spread 225, 220 for January 8th. This one CRM was actually below 220 this week, but came back up, so that's good. It's above 225, but not enough for me to close the trade. Got an Amazon put spread at 3005 strike for January 15. I had a chance to close it today for almost 50%. I think I could have closed it for 90 cents. So I collected $1.50. Could have closed it for 90 cents, but I didn't. And now I think it's not doing as well. I think it's worth $1.10 right now. So I'm going to have to hold on to it a little bit longer. This has a January 15 expiry. I've got Nvidia 475, 470 for $1. January 15 expiry. I've got Snowflake 265, 260. January 15 expiry, collected $1. And I've got Adobe 465, 460, $1.39 that I collected. February 19 expiry. And I've got Baba 255, 250 strike, 14 cents, net credit of 14 cents. So this is obviously a put spread that I was rolling several times. And I'm just trying to scratch it. And it's got a February 19 expiry, and I think Baba dropped below 255 this week, but now it's above 260. So let's just hope by February 19 I can close this trade without a loss. So yeah, these were my trades this week. For next week, I definitely want to play something on Tesla. It has high volatility, but I'm not sure which side I want to pick. If I want to sell the call or if I want to sell the... Alright, so if you have any questions about my trades, leave them in the comment section below. If you have any suggestions on how to improve the spreadsheet as well, leave them in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market and sell options, use my referral link below to get $50 in free commissions. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.